Joining me now is Kevin Quigg. He's a Global Head of Strategy for State Street Global Advisors, and he's a speaker here at the Metals and Minerals Conference in New York. Kevin, thank you so much for being with me.
Thank you for having me, Danielle.
Now, Kevin, some people I've spoken to in the past have said that ETFs are what contributed to mining stocks not performing well these past few years. What do you think of that theory?
Well, I think you need to take the context of where gold ETFs fit in the larger picture of the gold market. Gold, like any other asset, is driven by supply and demand. And while gold ETFs represent obviously a piece of that demand, it's a very small piece of the overall demand. So the action in the gold market and the price depreciation or appreciation is really driven by the fundamentals of the demand side of gold itself, of which the gold shares is a small part. But to say that the gold ETFs have really affected the underlying mining companies, I think is probably a bit of a reach.
Kevin, so it's no surprise that ETFs have not been performing as well as in the past. They've been hurting. What do you think is going to help get that turnaround, get people getting back into ETFs or gold just in general?
Sure. Well, I think the ETF industry itself obviously is very strong. Gold ETFs, because they are a reflection of the spot price of gold based on the London PM fixing, obviously have suffered the depreciation in price that other gold stocks have, or gold has itself. But with that being said, again, I think over the long term, a lot of the fundamentals are still in place for the gold market. I think people see gold as a natural inflation hedge, and it's being used in that in many ways. The other thing with gold is it's a natural diversifier because it has unique demand, because the jewelry industry, because of the manufacturing industry, along with the investment industry, as well as the geographic dispersion. India and China represent more than half of the demand. It doesn't act like another asset. And again, for the broad portfolio construction, particularly in times of uncertainty, gold really has shown its worth over the past several years. And I think it will in the future.
So Kevin, obviously investment demand was really the main driver behind the rise of gold prices these past few years. One of the main drivers, I should say. It's taken a step back. How frightening is that?
I don't know that it's frightening. Again, you have to keep in mind that one of the great things about gold ETFs and one of the reasons they're so popular is because they trade on the exchange. Many different investors, whether it be a hedge fund, whether it be a pension plan, whether it be an endowment foundation or a retail investor, all have access to the same spot price of gold. And all those investors are going to be using it in very different ways. So again, while you see some outflows in the product itself, I think to say that it's a mass exit is not accurate. I think you're seeing, again, a lot of people staying in the fund because of the diversification it provides and because of the non-correlation it provides.
What are the benefits of ETFs over physical?
I think the convenience of ETFs over the physical, I wouldn't say one is better than the other, but they're different. I think the securitization of gold through the exchange-traded fund structure makes it more liquid. You can buy and sell it throughout the trading day. I think from a total cost perspective, it's very efficient from a trading perspective, but also the insurance and the physical safeguarding is taken out of the equation because the HSBC vault in London is where the gold resides. So I think it's become a really natural hybrid for a lot of investors who either were looking at the physicals or were looking at the derivatives market, and it really gives you a lot of the benefits of each in one easy solution.
So in these times of uncertainty in the market, would you advise people to actually buy the metal and not so much mining stocks?
Well, I think generally speaking, regardless of how that interest manifests itself, I think less investors than probably need be are not invested in gold at all. And I think gold for any investor, regardless of whether in times of positivity or negativity, adds an element of diversification and again non-correlation to a portfolio. And whether you're going to use a mining stock as proxy or the spot price of gold as your execution, I think there's a case for gold in all portfolios.
Kevin, I know you can't comment on where gold is headed, but could I get you to speak a bit about the bullish and a bearish case for gold?
Well, I mean, I think obviously, again, gold is driven by supply and demand like any other asset. And if you look at the drivers of demand, I think number one, you have the 50% or over 50% of demand is driven by India and China. Both of those markets have growing middle classes, growing consumer classes. Obviously, the demand for gold is going to be driven on that. I think the development of those countries could be a factor. Gold is an inflation hedge for a lot of investors. Again, depending on what happens in the broader environment with inflation, that could be a driver of the price. And then finally, again, with supply and demand, you have to look at the supply side as well. The sort of new resources of gold have been somewhat stayed the last several years. Again, that's always something to keep an eye on with respect to how the supply-demand equation will play out.
Kevin, finally, with the time we have left, can I get some thoughts from you on silver?
Sure. I actually would not want to, again, speculate on the price of silver, but I think what's important, and the gold ETFs show this, is every commodity is very different. Silver, for example, has much more of its reliance on manufacturing, where gold is jewelry. That's going to have a real effect on how the metal itself behaves in the marketplace from an investment perspective. So with respect to silver, I think you need to look at it very different than you do other commodities and obviously very different from gold.
Kevin, thanks so much for your thoughts today.
Thank you very much. I appreciate your time.